Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for an altcoin roundup. I'm going to try and get this out each week from now on. Probably the day after Bitcoin video is done, or maybe even on the same day if I find the time. Now, a lot of you guys, and totally understandably, are asking for me to cover Ethereum. Yeah, I totally get it. But the thing is, it's just been voted for on the Discord for my Patreon subscribers as the monthly deep dive. So the idea is that will be getting delivered end of this month or start of next month, as soon as I can get it together, basically. And from that point, it will be included in the YouTube altcoin roundup. But until I've delivered on that promise to my patrons, I will not be including it in the altcoin roundup, as I will only be really looking at stripped down and simplified charts for this altcoin roundup on a weekly basis, as we're going to be covering multiple assets and therefore can't spend all that time digging into the charts. So if you are interested in seeing the Ethereum deep dive, which will be coming later this month, or like I said, first week of next month, then feel free to join the Patreon and you will get access to that as and when it's released. So enough said, let's get on with the analysis today. We're going to be looking at XRP, Cardano or ADA. We're also going to be looking at Dash, and we're going to also take a look at TRON. First thing I want to express as a general opinion about these altcoins is we're going to be looking at essentially three scenarios which are slightly different in terms of the form it takes or the specificity of the count, but the general idea is the same. Okay, and that's XRP, Dash and TRON. However, ADA gives us a different count than the others. Now, what I find interesting about this is I've put out a thesis a couple of months ago when I said I felt that the altcoin market was bottoming and about to bounce and go higher. That is exactly what has happened. I pretty much called it to the lows, which was nice if you managed to get in, but either way, I still feel it's a bit of a ballsy call, if I'm being absolutely honest, to say the altcoins have bottomed. It's still the way I'm leaning, and I know it causes a bit of brain meltage with some people who say, well, you're expecting Bitcoin to potentially head lower or continue to consolidate sideways for some time. How can you be expecting the alts to do something different? Fair enough. I hear what you're saying. Given the overriding logic of the crypto community, that's some kind of sacrilege, it would appear, to believe that that's possible. But for the meantime, I believe it is possible. If you don't know why, go back and watch the previous altcoin roundup video from a few weeks ago, which explains my views when I was suggesting that we were bottoming and why I felt that way. It's still on YouTube, you can go and watch it, so feel free. But going back to my point as to why I feel this is a curious phenomenon, including ADA, is all of these altcoins bottomed in March 2020. Now, I explained in the previous video how I felt that there was a revolution in terms of, and I mean the traditional term of the use of the word revolution, not as in taking over a country or something like that. I mean something that goes around and comes back around. That's what revolution means. It keeps happening. And in this sense, I said that the altcoins and the Bitcoin, which bottomed in 2018, and the altcoins, which bottomed in 2018, were on the same path as Bitcoin, just applying a little bit of logic. And when you look at Ether and you look at Litecoin, which I would argue are the first generation that the public is most familiar with, other than Bitcoin, that seems to have panned out because both have gone on to new highs beyond their 2017 highs. This is the exact same as with Bitcoin, so they all seem to be in the same wave degree, or at least maybe a step behind, but not a full step, at a greater degree, maybe at a smaller degree. There's some lag there, but generally I say that they're in the same place. They're in the same step. Now, the rest of the altcoins, which are a more recent addition, and I'm talking about going back to the previous cycles through 2013 to 15, and then through the bear market, then up to 2017. Going back through those cycles, the predominant or prevailing knowledge of crypto was very much, I would argue, around Bitcoin, Litecoin, and Ethereum, probably at the top. Since then, we've had XRP, Cardano. I mean, we could put Dash in the old crew as well to some degree. But Dash did not bottom in 2018. But that's getting off the topic here. We have Tron also, and then just a myriad of thousands of others. Okay, so on that premise, it would have made sense that the coins which bottomed in the same era top in the same era, or at least produce new highs in the same era, and that seems to be the case with those first generation. Now, with this later generation, we've got a coin standing out of the group here in Cardano, if I just show you the chart, which bottomed in 2020, but has since gone on to new highs, and is still pushing higher as I speak, and appears to have produced a slightly different count. A count that's in line with Bitcoin, Ether, and Litecoin, but bottomed later. So this is quite curious, and we have to be cautious in evaluating what we're looking at here. But let's just get on with a basic summary first. So, looking at XRP now, I stripped all of these charts down to the bare minimum because I do not want to get caught in the minutiae. Okay, we were going to, because we've got multiple assets to cover. So I'm going to switch into linear scale first, which skews the chart tremendously, obviously, and we're just going to come out to the weekly time frame. So here's the whole thing, the whole asset. 1, 2. This, of course, looks absolutely ridiculous in linear scale. 3, 4, triangle, 5. I'm not going to assign a wave degree. Now, the count that I have done here is primary, so that would suggest that I'm saying this is cycle 1, but I don't know if this is primary 1 and this is primary 2. That will adjust the entire count going forward. I essentially, because we've gone so far so fast and then come back so far, this does feel like cycle 1, cycle 2, but it could be primary 1, primary 2, I don't know. Things will have to flesh out into the future. We've only got price data back to late 2013. Okay, so first thing I want to look at is how far we've retraced back from the highs. So I'm going to use my little magnet. We're going to come down to here and we're going to go find the lower where I've got it listed here. So in linear scale, we've come not quite to the golden ratio. We haven't retraced fully to the 61.8 here, which is the yellow line. So if I just shift my fib into my golden ratio, we can see that we've come through the 50, we've topped out around the 50, we've solved off, we've come back. So, haven't quite made it to 61.8. There is an argument to suggest, if you're a bear, obviously, there's an argument to suggest that all we've done is a move down, a counter trend move up, and then we will have another move down. Well, although this is possible, it's not my thesis. I prefer to count this as having bottomed in 2020 and now a new bull market has ensued. I feel the scale of the sell-off overall from the high to the low is a single corrective move. I think that any expectation for any kind of parity between an A and a C is literally impossible with a 96% sell-off. Now, in a log scale, we can squeeze it to make it seem possible. That's fine. And when looking at very severe price moves over a short period of time, we can always look at log scale when we're considering those skews in price. So if we shift into log scale, we get a different story here. In log scale, we can see how now the overall move, I don't know what to do with this. I'm just going to hold my hands up and say that this is a line, just a line on the linear scale. I could say this is the 1 and this is a three-way swing into a 2. Okay, and we can just say 1, 2, or this is 1, 2, and this is an intermediate move. I don't know. So, a prime move of a greater wave degree. I'll tell you what, just for the sake of it, let's just stick it over there for the moment. The reason is because we've got this lower low, so we can't start the chart at the low, you see. That's the problem. But either way, this is irrelevant. We get a 3-4, which is definitely a triangle here. So this identifies this as a 4. Then we get a thrust up into a 5. Then we come back in what I say is a WXY here, a zigzag here. This is a three-way expanding, I think this is a regular flat, sorry, here into the X. excuse me, bring that back. Another 3 wave move into A, another 3 wave move into B, and the final 3 wave move into the C for the Y. Then from there we start a new bull market and we retrace over 61.8% in log scale and make a lower high to the 2018 January high. So just entertaining the bearish notion for a minute. The bearish idea. Now this is uber ridiculously over the top kind of bearish. This assumes that all of this was an A, all of this is a B, and all of this will be a C, and for some reason the alts across multiple spaces are completely detached from what Bitcoin is doing, which has gone on to triple, more than triple its previous all-time high, while these haven't even made it back to their high. So I would find that very odd, considering the names we're dealing with here, because you might say, oh well, XRP is in trouble with the SEC and blah blah. Yeah, but this is applicable to all the ones we're going to look at today, bar ADA. So it's applicable to TRON, and it's applicable to Dash, and it's applicable to XRP. There are so many coins out there in the space which I would argue are less viable projects. I'm not going to argue about fundamentals, however, but you get my point. Okay, so this would have us coming all the way back down to 0.07. So that's 7 cents, isn't it? So all the way back to 7 cents if this was correct. Not the count I subscribe to, but we always keep an open mind here at Greenstar Trading, and we always try to consider all possibilities. So what we'll do is we'll use our orange count at primary degree, just to keep our minds, keep it in the back of our minds that this is, albeit unlikely, a possibility. Alright, so now that we've done that, we'll do the same on the other two charts as well that we're going to look at, excluding ADA because I don't think it's applicable. Excuse me one moment. Alright, let's remove this fib. So coming down into the daily time frame, let's just talk you through what I've got. Now, like I said, I've stripped this down the best I can to try and make sense. We have a 5 wave move dividing as an impulse into a primary wave 1 here, intermediate degree into primary. Now what I've done is I've taken this move here as a diagonal into a 1. You can see some of the structure here is very wedge-like, which is what we'd expect to see going into a 1. So this concludes the 1 around the 20 cent level at intermediate degree. We then get a 3 wave swing into an expanding flat A, B, and 5 steps down in a C to a lower low to complete our wave 2. I prefer this count here than trying to make what is the B wave external corrective swing to this A, trying to make this the wave 1. I prefer this as an external swing, so A, B, C. The reason I say that is because it allows me to count the whole move up as an impulse. The reason is I don't get an overlap here in a wave 4. 4 doesn't overlap the 1. I get a completed diagonal pattern here, 3 wave expanding pattern into a 2. I get an impulse wave here. Okay, I mean I haven't labelled it because like I said I'm trying to keep the chart down to a minimum. But we do get an impulse wave up to here, so we can shift our 3 across. But let's just leave it blank, we're trying to keep the chart simple. We then get our move down here into our 4. This could be an A, B, C. It's more likely a double combination. W, X, Y to here. Then we get another move up into our primary wave 1. We get 5 moves here. This could also be another diagonal into or it could be another expanding pattern. 1, A, B, C, 2 perhaps, 3, 4. So multitude of ways of labelling this. Let's just go with this for the moment. 3 wave swing into a 2. 3, 4, 5. We'll put that one up and we'll say this is minute scale, isn't it? Is that right? It's minor, isn't it? Okay. So we get our way up into a wave 1 at primary degree. So our first assumption, as we always assume, or should always assume, there tends to be an extension occurring in either the wave 1, the wave 3 or the wave 5, the 3 motive waves of an impulse wave up, right? The most common by far is the wave 3. So when labelling, rather than trying to force 5 waves all the time within the same wave degree, you will come unstuck very quickly if you try to make try to do that. The best thing to do is to assume an extension in the free instead. This is one of the things I've covered on the Patreon in Elliott Wave extensions. So to sum up, if you were to try and count every high and low, you'd get yourself into trouble pretty quickly, because you go 1, 2, 3, 4, oh dear, overlap, oh dear, different lengths in terms of the motive waves and different lengths in terms of the depth, no alternation, ending up with an expanding pattern which makes no sense as a diagonal, so on and so forth. And then what you're going to do, say 5, and then you see how you quickly get yourself into a mess, where you're much better off saying 1, 2, 1, 2, 1, 2, 3, 4, and so on and so forth. And you break down the wave degree from primary to intermediate to minor to minute to minuet, so on and so forth, until we end up with all this stacked up here waiting for us to fill out later. So don't get your hopes up while I'm moving the cursor about up here and you're looking at the ridiculous pricing. This is just out of the way so I can drag it down when I need it. It's just a habit of mine, as I don't like it cluttering up the chart, you know, waiting to be assigned. I'd rather have it out of view. So going through our primary 1, 2, we then get a 1, 2, 3, 4 triangle in the 3, 4. Now this is one of those cases where you are tempted at a smaller wave degree to look for an extension again, but it doesn't pan out. But that doesn't become an issue in this case, because the completion of the wave 4 within the triangle here, which is the E wave, A, B, C, D, E, does not transgress into price 1 or wave 1 territory, so it's not an issue. We don't get an overlap. 1, 2, 3, 4. And a nice clean 1, 2, 3, 4, 5 waves here into our intermediate 1. I think we can afford to throw those up. 1, 2, 3, 4, could be even another triangle there by the looks of it. So this now comes down to minute degree. Alright, and now we get this here. So although it looks like it's labelled as a flat, A, B, C, it's actually a zigzag. There is 5 waves in here. You can count it. I think it counts more cleanly as a diagonal, but either way you can have a diagonal in either the A or the C of a zigzag, so it's not a problem. A, B, and then 5 waves down and a C to complete our intermediate 2, and then we begin a new count 1, 2, 1, 2, 1, 2, so on and so forth, and we start to extend again. Now this is nice and simple really, because if this is correct, then once this wave completes into minute degree and then into minor degree, we should get another pullback in a wave 2. Could go beyond the highs, the one could, it could stop before. We could squeeze this last bit of price data within the previous high quite easily. That would be a 1, 2 again at minor degree, so we would have gone primary, intermediate, minor, and then there's no turning back after that, because we now go into the 3 of the 3 of the 3. And at that point is lift off. So if this count is correct, the lows that we made back down here at 50 cents will remain intact. We will not make new lows. We will continue to impulse. We will have a pullback which will likely shake people up, because we'll come somewhere to or beyond the highs, near the highs, and then we will have a significant pullback for a wave 2. It could be 38.2%, 50, or 61.8. It could be big, it could be small, but I would suspect it will be bigger than anything since this initial pivot off of the low. Okay, and then we will pull back, and then we will break out higher in a wave 3, and then it's once we've got that initial move up and move back, we can start making measurements at minor degree. Now, you could argue, why have you counted an extension here in the 1 rather than the 3 at this degree? Well, you could say this is minor 1, this is minor 2, and therefore we're working on minor 3, minor 4, minor 5 to find intermediate 3. Well, we by my measurements, with this initial 1-2 swing, we would only just clear the previous high at intermediate degree, which doesn't look like it belongs to the same wave degree at all. So I decided to give it the benefit of the doubt that we're just building a much, much bigger wave 3 extension, and therefore this is just minute degree 1, 2, 3, 4, 5 into minor 1, 2, and the minor 1, 2 isn't in here, it will be in here, and you get this same elevating pattern that we've seen, where we've got, if I just get my brush, here's the primary one, here's the intermediate one. So if we saw the minor one up here, that would be more in keeping with the idea that we had a primary 2, intermediate 2, and minor 2, and we're just building this huge elevating extension which is going to break into the 3 of the 3 of the 3, and then it's party time. You know, it's just off to another galaxy, really, rather than the moon at that point. But this all sounds extremely uber bullish, doesn't it? I know it is, but that's why we started by considering the extremely bearish, the idea that we don't make a new high, we collapse down in 5 waves to new lows, and it's bad news for everybody. Well, good news if you can buy it down there, because it's still overall bullish in the long term, long term, because this whole move up now becomes a 1 and a 2, right? Rather than a 1 and a 2. So the whole thing was being corrected. So there's XRP. Now, I've laboured on this a little too long, I think. So let's pick up the pace a bit. Dash. Similar gig. Very similar gig. This is why I haven't wanted to labour too much on it. The correction down in log scale looks... Oh, let's just compare it. If we look at XRP, you can see a 3-wave swing here, sudden pop, and then what looks like a 3-wave swing here. In Dash, we get a similar pattern. We get what this can be interpreted as 5 waves. Okay, so the way you can look at this, you could look at this as a 3-wave swing of 3 waves. Double combination perhaps in the W, maybe, rather than a pure zigzag. Then an expanding, then a running flat into an X wave, then a 3-wave swing down into the 2. That's another way of looking at it. Or we can move the X wave to here and say this is a 3-wave swing. Okay, and that's to accommodate the 5, what looks like it could be 5 waves into the low. So W, X, A, B, C, X, this is a regular flat into... Is it a regular flat? Actually, you know, sorry guys, I'm just fiddling around with things without checking them. Pick out the high. Okay, we're going to need our usual fib. Ooh, this high just comes just shy of 89%. So yes, maybe that's why I was interpreting it the way I was. This doesn't quite qualify as a running flat. We don't get that 90% B wave retracement, which we'd like to see. But regardless of how we get down here, the point is whether we count it like that and say this is a 3-wave swing here. This could be a regular flat, A, B, but very extended C in that case. Or we can count this whole thing as a 3-wave move down to a W, sudden move up in an X, into a Y. And if you're not happy with any of those options, maybe we can just count this whole thing as an ABC. A, B, C, and it's a zigzag. So in other words, we'd be looking at digging out 5 waves down here, 3 waves to here, and then 5 waves somewhere in here to a low. So you know what? I've talked myself into it now. So I'm just gonna, I could always come back, change my mind later. But for the moment, sod it. There we go. ABC. In red, I think I actually prefer it here in Dash. So maybe we've actually discovered that Dash is doing something slightly differently. We still bottom in 2020. Now getting off of the lows here is very similar to what we've done in XRP, which is one of the reasons why I like the look of it. A lot of people have been saying things to me who, and I'm not discrediting in any way these guys' expertise, but people who seem to know a lot about the fundamentals. I'll have people who've literally just got into the crypto space in the last month and they'll come and tell me that Dash is dead. And then I'll come across people who tell me the opposite, who've been in it for a lot longer. And then I come across people who tell me, no, it's dead. And I'm like, well, you worry about the fundamentals, old chum, and I'll focus on the technicals, because I can't understand why the exact same patterns would be occurring across an asset class and multiple assets within that asset class if one of them's dead and one of them's not. That doesn't seem to make any sense to me. So I could be wrong, but you know, like whatever, I don't know. So let's just have a quick look at the same thing we were looking at in XRP, because Dash has not retraced anywhere near the same level. And this is there's lots of other coins this applies to as well. I've seen it in NEO, I think, which is another one I will add to the altcoin roundup. I've just got a bit more work to do on it first. So here in linear scale, right, we get a retracement of 26.3%. Okay, so even if we were doing the ABC B wave bounce, right? Like the uber bearish scenario we spoke about in XRP. Let's just throw this up here for a minute. No, twerp. You got it the wrong way around. Is that the ABC? So A here. B somewhere around the 50 at least around the 50, I would suspect, and then back to basically zero in a C. Yeah, it's only going to make sense in log scale because if we come down once again over 90%, right? So this suggests to me that the market bottomed after a 90+% sell-off, same in XRP, and this is now a new bull market. Even if it was a B wave, it's not. It's only done 23%, so we'd still expect Dash to come well up to find the 50 in even the most bearish scenario. So there you go. Now in log scale, it's a different kettle of fish, of course, because the bigger the move, the greater the skew. The greater the skew, the more dependent we are on log. And in that sense, we've come through the 61.8% and then got rejected. So if you were going to be bearish in that sense, that's the one that would make. This is the scale that we'd be looking at. Really, we'd have to be saying it's all about log. It has to all be about log, otherwise it doesn't make any sense, doesn't it? So where would we get? Excuse me, I think I made a mistake on XRP. Let me just go back, because I think I was using the double bottom when really I should use the extension. So what? Dash at $11. Let's just see if that panned out as well on XRP. I really need to pick up the pace, Tom, if you're going to be doing multiple assets. No, I did do it. Okay, so I will obviously timestamp these, I think. So talking about Dash A, B, C. So now we're getting off of the low. It's the same setup for the uber bearish situation. A complete collapse in 5 waves down. In which case, all of this would be a 1 and a 2, 3, 4, 5, coming much lower. That's the uber bear. Now, if we come into excuse me, if we come into how I've interpreted this, we get a very similar move off of a low, but a cleaner impulse. 1, 2, 3, 4, 5, diag in the 5th, no overlap 4 to 1 in the initial move off the low into primary 1. 3 wave swing, external correction again, A, B, C, flat pattern into the 2. 1, 2, 3, 4, 5 into minor 1. Sideways correction into the 2 here. This could be WXY. 1, 2 again. This looks like a zigzag into the 2 at minute degree. And then we get a expansive flat pattern A, B. Nice clear 5 wave move down in the C here. 1, 2, 3, 4, 5 at minute degree 4. This brings us into a 1 expanding into a 2, expanding flat again into a 2 at minute degree, zigzag 3, 4, 5 into minor 3, which is a zigzag as opposed to a flat or double combination at minor 2 degrees. So alternation, 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 alternation all the way up. Okay, and then we have a nice impulse wave into the 1. So although it looks scrappy as hell, and it does look scrappy, 4 doesn't overlap the 1 at minor degree. 4 doesn't overlap the 1 at minute degree. We get no overlap here at minuet degree. We get alternating flat and zigzags as well, or combo and zigzag in this case, zigzag and flat in this case. So alternation all the way up off of the low. No overlap, pure impulse wave coming up into a 1. It actually is, although it looks scrappy as hell, like I said, it actually is technically cleaner than XRP is. So if Dash is dead, then I've counted this wrong at the end of the day, which is also always a possibility. Excuse me, because we're just humans, aren't we? So this now is either 5 waves down, or it's a completed ABC. So 4, no overlap over the 1. 3 is longer than the 1, but significantly shorter than the 5. So it is still a perfectly legal impulse wave down into an A. We get an A, B, C, D, E into the B for a contracting triangle. What did I just do with you? There we go. Now, triangles are one of those picky things where you can be a real You have to sometimes be a real stickler for how they're constructed. Ideally, a simple explanation, as I teach in the Elliott Wave series on the Patreon, is you're looking for no more than one complex correction within the triangle. You prefer to see nice clean zigzags, right? But if you're going to get a complex correction, you'll find likely no more than one of them, often occurring in my experience in the wave B, but not always the case. Right then, so we get, and then of course this is a contracting triangle, so rather than in a barrier triangle, where we'd be looking at something which looks much more like this, in this circumstance we would expect to see we'd expect to see the B and the D waves positioned along the flat line, and the other labeling ascending towards it. So if we would come up and we'd go, let me get my head straight here, my brain's gone a bit mental. This is the first reversal, so we go A, B, C, D, E. So this would be a scenario where people call these rising triangles, and they call them bullish triangles. Now that's not in any that's a fair assessment. They might not necessarily appreciate the Elliott wave behind it, but these tend to occur in a rising trend, like this. Okay, and so this often gets called a bullish triangle. It's actually a barrier triangle, and it's an Elliott wave pattern, and the B and the D will be positioned along the flat side of it. That's just that rule. The opposite is true the other way around. Okay, so if we're looking at a triangle like this, the first move down and back is where the first counter trend move is where we begin the triangles count. So we would go A, and then the B, C, and then the D would be along the bottom. And then this is a free Elliott wave lesson you're getting. 1, 2, 3, 4, 5, down like that. And that would be called a bearish triangle because it's descending. So these basic geometric patterns which occur on the charts, they are Elliott wave structures. People might not know that they are, and they just say it's triangle, it's a wedge, but they're all Elliott wave structures. That's the point I'm trying to make. So moving on, this is an acceptable triangle. It's not a barrier triangle, it's a symmetrical triangle. Therefore, the position of the B and the D waves doesn't matter, is not specific to its form. It's just the first counter trend move is where we place the A, and then you move on from there. Nice and simple. So A, B, 1, 2, 3, 4, 5 down into a C. Once again, the 3 is longer than the 1 but significantly shorter than the 5. This is quite common in crypto. I've noticed in cryptocurrencies. I've also noticed it in gold and, well, some commodities actually for that matter, that capitulation tends to occur in the fifth rather than the third, and therefore you can end up with this weird skew in the fifth wave, which is always the biggest. Not always, but tends to be the longest. From there, same gig. 1, A, B, C, expanding into a 2. Here's one of the things which stands out for Dash above all the others at the moment that I'm looking at. And I've looked across multiple exchanges to confirm this. Dash stands out because of this volume spike here around this, what I've got labelled as minute 1, 2. We don't tend to see this in many other alts. We get a little increase, but we don't get this big spike in the volume after such a declining period. So one of the reasons I like Dash is we had such a gigantic retracement for one of the older altcoins. It bottomed later than many of its era contemporaries such as Litecoin and Ethereum, and is now showing very bullish signs off of the low regarding volume, huge engulfing bullish candle, and then potential clearer extension occurring here. Now I haven't labelled the rest because it really is a case of waiting for the next correction to come along, because we're either creating another extension again here with 1 and 2, 1 and 2, 1 and 2. Okay, this first labelling I would argue is probably the case. So all I can really do is label what I think is this next wave up inside of this greater wave. But then we get what looks like another 1, 2 here, and you see what I'm saying, it's just a bit too tricky at the moment. Once we get a pullback on some larger degree, we can be more certain. But if this count turns out to be correct, just like in XRP, this is bullish beyond words. It's just basically building an absolutely gigantic extension into a wave 3, which is going to take us to just so much higher. So that's just something that That's how Dash looks at the moment. I do actually like the look of this one, so if I'm being an idiot for fundamental reasons or something, you'll have to forgive me. I'm not interested. But if Dash is dead, it doesn't look like it yet to me. So, alright, Tron before we move on to the wild card, which is Ada. Let's not go over spilt milk or water under the bridge again. Same shit down to here, bottoming in 2020. Impulse wave off of the low, no overlap, flat, zigzag into a primary one, double combo into the two. Don't ask me to count this because I'm just not going to do it. I just can't get anything in here which gets me up into a 1, and therefore I'm going to have to call this it's some kind of diag, right, with just overlaps galore, or the correction finishes later and this is the 2, and then we've got 1, 2, 3, 4, 5 into an impulse, but then trying to make sense of everything prior to that, especially in what we're suggesting is a double combination. None of this is countable. I mean, you could spend all day contradicting yourself. You can go, oh, that's a free wave move, and that's a free wave move, and this is a free wave move, and that's a free. And then what are we dealing with? WX, Y, X, Z, QT, W, and 1 again. I mean, what is it? So we're not going to waste our time with this because I can't make sense of it left or right. So all I've been able to force myself to do really, because of this problem, is to stick with the idea that wherever the 2 at this primary degree is, here, 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 we're dealing with the same pattern again. The beginning of a new bull market in March 2020. Now once again, I'll label it again, it's possible that all of this is a counter trend move and we're just going lower. Okay, so counter wave B completed, and then that would give us A, B, C, 0.003 of a cent down here, so tiny teeny tiny. That would be absolutely catastrophic, wouldn't it, really? In terms of this being a free wave move, it would still imply that whatever this is off a low, since this is a lower low, it would still imply that this is a 1 and this is a 2. So the pain you'd have to go through to get through it would be unbearable, but as long as you bared it, you would be fine in the long term. Easier said than done though, yeah? So from here, same trick as before. Let's just shift everything up and out of the way. I don't want to get distracted. I'll leave a 1 and a 2 in place as I'm still expecting that to play out across multiple charts, somewhere above the previous high or just beyond it in the case of XRP. So coming down in ABC here, this is slightly different. Now, people have pointed out to me that, oh, you've got a free wave move in Bitcoin that's completed, Tom, and you haven't spotted it. I have spotted it. I've mentioned it multiple times. I don't know why people keep thinking I haven't seen it. This is an ABC 335, and you might say, well, that's a bit of a long C. It's like, you'd be surprised, actually. You'd be surprised because it's just beyond the 1618. It's nowhere near the 2618 like it is in Bitcoin. It doesn't even make it to the 200. Okay, and in off of log scale, it makes it to the 131.8 into a double bottom. 131.8, bum, bum, and off we go. So that is a totally legitimate flat pattern. Absolutely legitimate flat pattern, that is, because we get a 90% retracement. We go beyond it. Oh, sorry, I haven't quite picked out the high. But either way, look, we go beyond 89%, so we go to 90%. Free wave structure in here, I would say, wouldn't you? 1, 2, 3. 1, 2, 3, 1, 2, 3, 4, triangle 5, 3, 3, 5 pattern. Done. Flat. Let's just label this because this is different from what we... Sorry about that, guys. I'm back again now. You'll notice a little bit of a blip in the edit, but I had a bit of a cock up for a moment and lost my chart and closed it down. So we're back now and everything's hunky-dory. So let's move on. I was talking about how this is a perfect flat pattern, wasn't I? I was saying how everything's come across kind of nice, kind of neat. 335 flat. Okay, so let's save the chart. Much nicer than we've seen in Bitcoin. We can get a 335 flat in here rather than having to force a zigzag. which gives us the option of having bottomed. So I really like the look of Tron. I do not like the look of this, admittedly, but what are you going to do? Okay, I like the look since the low, and that's all I'm going to say on it. So I don't think there's anything else to talk about. So finally, Cardano. Cardano here. Tricky. Interesting. Because we bottom in 2020. We get the same double combination move down. I've got this as a W, X, Y, X, Z. I don't think that's necessary. A, B, C. Three-way swing here. I don't think we need to label that like that. I think we can just say this is sufficient. Okay. This is definitely a zigzag into a W, combo into the X. I don't think I can label that as an ABC. I think 1, 2, 3, 4, 5 zigzag. Yes, I can. So this is a zigzag, not a flat. I've labelled that as such a completely different move off of the low. We impulse, suggesting a completion of a 1. We correct. 2, 5 waves down here, what I've obviously labelled as a C, A, B. So let's just delete that, it's confusing. Bear with me. 1, 2, 1, 2, 3, 4, 3, 4, 5, into the 3, into the 4. So going beyond previous highs of 2018, going considerably further than Dash, TRON or XRP in this case, much more akin to the first prime movers of the previous cycles like Litecoin and Ethereum, which I've mentioned. So for me, this, although you have to bear with me here because I'm struggling to get my words out to try and explain what I mean. This looks more bullish, right? From an altcoin perspective. Yeah, I'd agree, given the move that we've had. However, I'd argue that we've come up sooner and faster than the other alts is because we're not building an extension. It's a huge move. I'm not going to take that away. Yes, the 3 is probably an extended wave out of the 1 and what will be the 5. I will give you that and say yes, it's still an extension, but it's not on the same degree that the other alts are trying to build. So without having to build all of that basing, let me explain what I mean. So we go bum, done, 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 and we're just doing all these 1s and 2s until we finally break out. This is what XRP, what Dash, and what TRON look like they're doing. So they've spent a lot of time basing this future extension. Okay. Now this is all just theory, guys. This is all just me talking about what I think it explains this. Like I said, I'm not a fundamentalist. You won't find me shouting God is great and using fundamentals to describe price action. I will use technicals. And for me, this is very slow burning, but phenomenally powerful once it completes. Whereas what it looks to me like Cardano has done is rather than trying to build a gigantic extension, it's just impulsed into a nice clean, like that. And I think I'd argue that's what we're dealing with. So we've just gone bum, 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 like this. Nice clean impulse wave. So my explanation for why ADA's run up here, and I'm talking purely from a technical perspective here, I'm not talking from the fundamentals. I'm sure all the guys can come up with loads of reasons why ADA's better than the ones I mentioned, but from a technical perspective, the enthusiasm for ADA's price was here sooner. There's absolutely no doubt about that. Whatever it was that drew people into ADA definitely occurred sooner than it has in the other alt space, whether it's the excitement around the project, whether it's the potential for technology, but whatever it is, we impulse in a much cleaner fashion and much quicker here in ADA, and there was much more market acceptance earlier on than there has been in these older altcoins. However, what that actually means is that the overall move is going to be smaller. So Whenever altcoin begins and we get out of this extension, of this idea of building this extension, then we will actually go way further in the free that belongs to this extension than we did in ADA. I mean, it's not a guarantee, it's just a suspicion of mine, and we'll actually end up with a much greater move in these older altcoins, or altcoins which bottomed around the same time, let's say it like that. Just an idea, might be complete bollocks, but that's how it looks to me. It looks like ADA just put in a nice clean impulse wave, whereas these others are building a more complicated extension in the early phase of a wave 3. In the early phase of a wave 3, unlike the potentially completed wave 3 in ADA, okay, we end up with not having even run into it yet in these other ones. Now, you could say, well, what if this is an extension, Tom, and ADA is just even more bullish? Well, fine. In that case, all I would do is move the 3 up to here instead of the 5, move the intermediate 3 to here, and say this is a 3 for intermediate degree, and we're still within the primary 3. But in terms of trying to establish any relative or any relationship with the other alts, that's not helpful in any way, is it? Because all we're doing is, if we're just going to keep moving the goalpost forward, well, we can just do that over here as well, and we could just do that on Bitcoin, we could just do that on Ether. Until I see evidence to the contrary, I'm considering a completed wave 4 in Cardano, or a wave down. That's it, really. Now, I know that's not much help, because the problem I've got is trying to make sense of an altcoin that bottomed later than Bitcoin but has displayed the same behavior, whereas the other alts which bottomed didn't. So you've got to build a thesis around that one way or the other and say, look, it's either because of A or it's because of B. And my idea is that Cardano came up in a typical impulse wave, didn't build the same extension, got up here in a hurry, much faster than the other alts, but will not make the same gains long term. Still massive, there's no denying that. The alternative is that this is just an intermediate 3 and we're still got a long way to go yet. So, really simple. I'm feeling a lot less secure in Cardano than I am in these other alts. Not because I don't believe this can go higher, but because we're already so high relatively. You know what I mean? When you're building a base, it's better to be building it off of a 95% discount, or 94 or 92, whatever, than it is off what we got here in Cardano. This, therefore, leaves me a little suspicious. Now, if it is a completed triangle, A, B, C, D, E, you're like, oh, Tom, this is the flat side. This is where B and D should be. Look, I know, but it's not flat. It's a contracting pattern. Just. And therefore, I can get away with saying A, B, C, D, E. This is a counter trend move in the A here. Alright, A, B, C, D, E of the greater wave 4, and now we're coming out of the bottom. So you're like, but it's a descending triangle, Tom, it should break down. Yeah, I know, I've had this discussion with members, but if we don't get that perfect barrier as an Elliott wave triangle, barrier triangle with the B and the D set up here for the initial counter trend move, then you can break out of a descending triangle. I've seen it. I'm sure other people have seen it too. It happens, and it can be very confusing to people who don't appreciate the Elliott wave picture behind the triangle shape. It can be really misleading. So, but then again, this could be completely wrong, because let's just make it super simple. A, B, C going to hell, much lower. This would not have been a triangle. Because this would have to be an A wave, so we'd have to scrap the triangle, reinterpret this. Be my guest. Go away and do it. You trying to explain to me why we have a series of higher lows, right, and lower highs, which is a single free wave corrective move. I can't. I haven't seen it. I haven't figured it out. So feel free to be my guest. I haven't spent that much time on it, admittedly, but triangle seems to make sense. So not really. For the moment, we've broken out of it, we've backtested it. I think we're moving higher. If we've completed primary wave 4, we will continue to move much higher. If we completed intermediate 3, we haven't even completed primary 3 yet, and therefore a much longer, more sustained sideways correction will come at primary wave 4 degree if it's not already in. I hope that makes sense. You know, Visa Bitcoin, essentially, in other words. Alright then guys, I've been waffling and waffling and waffling and waffling and waffling. I'm taking forever. I need to get this down to a faster rate next time I do it next week. So let's do a super quick fundamental roundup. We're just going to pick one. We're going to pick XRP. Next time I'll do this on more, but I just haven't got the time to do it now. So we're going to bring up we're going to hide the count, bring up our 10, 20, 60 and 250 exponential moving averages in yellow, blue, orange and green respectively. We're going to back out to the weekly time frame and we're just going to look at XRP for the moment. It's going to be a similar story everywhere we look. Right then, so what can we see in the weekly time frame? Can we get VP? Yes, we can. Right then, so RSI set to attain closed green 30 levels over sold, red 70 level over bought. MACD 10 for the short term, 20 for the long term, in blue and orange respectively. What can we see? Above the 10, above the 20, above the 60, above the 250. No bearish cross occurred on the weekly time frame with the 60 over 250 or the 20 over the 60. So no extremely bullish bearish conditions arrived at any point since the bounce back in March 2020. Obviously the whole bull market, we saw those conditions of the 20 and the 10 crossing through the 60 on the weekly time frame and the 10 and 20 crossing through the 250 on the weekly time frame. We are a long way off of that, and therefore looking much more bullish. Finding support around the same weekly exponential moving average that we saw in Bitcoin, which is the 60. We have a series of divergent highs here, but I would argue that the RSI has been reset given our wave count. We did not come to oversold, so we can't be 100% sure of that. This could be a counter trend move before going 1, 2, so on and so forth lower. That is always going to be a possibility until we make a new high. Once we make a new high, the idea of this being a 1-2 is gone, and therefore we can be more confident. Nice buy signal here on the MACD. Sudden loss in bearish momentum, sudden vibrant move into bullish momentum, crossover of the signal over the average, green bar on a histogram. Great. Let's come down to the daily time frame. Above the 10, above the 20, above the 60, above the 250. We got awfully close to doing what people call a death cross, which is the 60 over the 250. Now, the problem is if people use different averages, and people do use different averages, if they used a 100, 150 or 200, they may well have called death cross here and then gotten absolutely raped, because it would have crossed and then just skyrocketed. I've said time and again how I feel about those things. I'm more interested in sustained price movement above or below and testing for support and resistance than I am in what the crossing of the signals means. That's less important than what the trending of the signals means, in my opinion. 10, 20, 60, 250 above all of them now trending higher, all of them now pointing higher. So that's positive. Back up into overbought conditions. No significant divergence to speak of because we have no higher high. I would argue a higher high in price would push the RSI above this previous reading. If we did get that, that's very bullish. I would like to see that actually in the next few weeks. That would be much more convincing than if we get a higher high with a lower reading in the RSI. If this is correct, and I'm interpreting this as a wave 3 extension, we should continue to see in the future the highest RSI readings as we enter the wave 3, particularly the intermediate 3 of the primary 3 should give us the highest RSI reading, but that's going to be many months away yet before we get up to that level. Nice bullish action here on the MACD. I would expect to see this over the coming months push higher to new readings if we are entering a wave 3 as well, and take out this previous reading which we're calling a wave 1 at intermediate degree. I expect to see both of those things come about in the MACD. They haven't yet. If they do over time, as we set new highs in price, I would find that very reassuring. Alright then, so that's really how I see things for the altcoin roundup, guys. I'm sorry about that little cock up in the middle. And I will get this edited and out to you soon. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases, and leave us a comment in the comment section below if you'd like to. And I will be back with you guys later in the week. Oh, and before I go, as always, big thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a Patreon subscriber, there's a link in the description box below. Go over, have a look at the tiers, see if there's anything that you're interested in. And also, there's a link to my Twitter feed in the description below as well. If you're not following me yet, go over and do so. Alright guys, take care. I'll be back with you soon. Bye bye.